Precious Metal Summit 2022 here in Zurich, and with me here is now Skeena Resources and Earle, the Senior Vice President of Corporate Development, wants to give us an update on the beautiful company. Thanks for taking the time, Kelly. How are you?
Nice to see you, Jochen. I'm well. How are you?
Super. All good so far?
Good.
Thank you very much. Great show going on here. And finally, a lady for the interview. I love it. That is great. Yeah, Skeena Resources, I mean, you guys did an exceptional job with the Eskay Creek project.
Thank you.
You published a great feasibility study with values, I must say. Wow, I'm astonished that you are not taking over so far.
Yes, thank you. Yeah, we were very excited about the feasibility study that came out in September. $1.4 billion after-tax NPV at a 5% discount, 50% IRR, 1-year payback. It's a very robust project, and that's just because it's so high grade, running at 4 grams per ton for an open pit.
Yeah, I mean, that is outstanding anyhow. And I think you did it at $1,700 gold and $19 silver.
Correct.
Right?
Good memory.
So that is already overtaken today, I would
Agreed.
say. Yeah.
Yes.
That's great. But let's come to some exciting developments over the last 1-2 weeks, I would say. You did new discovery.
Yes, we've had a couple of new areas, but the one that we're particularly excited about is called the Eskay Deeps. So this is to the very northern end of the project. So this is a former underground mine. So there's historic underground workings, but they only drilled to about 250 meters from the underground workings. And then there really isn't any drilling farther north than that. And we put a drill hole in I'd say about 600 meters away from the historic underground workings. A vertical drill hole, a bit of a wildcat shot to see if we could find any continuous mineralization at depth. The whole deposit dips as it goes to the north. And sure enough, we had a spectacular discovery. We hit 4.5 grams per ton gold equivalent over 32 meters. It's in the rhyolite horizon. If you're familiar with Eskay Creek, there's the main contact mudstone horizon and then the rhyolite below that, which is clean ore. So it's in the rhyolite horizon. We're extremely excited because as far as we're concerned, if there's mineralization that far away, it means that there should be mineralization in that entire 600-meter gap. So we're very excited. It was only the one drill hole, so we're going to have to wait until next summer to follow up on it. But the geologist and the entire team is very excited about the potential there for adding more ounces.
And so you want to fill next year those 600-meter gap?
Yes, we definitely will. So we did 56,000 meters of drilling this year, but the focus this year was really surface, open pittable ounces. So we had some new discoveries in the 23 zone, 21A West. We had some new in-pit discoveries. We turned areas that were waste into ore. One of the hits we had off the top of my head was 48 grams over 12 meters in an area that we thought was waste. So we had some great success there. So that was the top priority, open pittable ounces. That's where the majority of the 56,000 meters went. We still have about a third of those drill results left to come out, so we could still have some more good numbers to come. And then
I'm sure you will have.
I'm sure we will too. And then next summer is when we'll really open up and look at the underground potential. So we're permitting open pit only to start with. So this is looking at the future underground potential of the mine.
Okay, super. Let's stick shortly with the open pit because as you said already, you have also had discoveries just below the open pit. So does that mean that you might change your open pit design?
Yes, agreed. So we've had some discoveries just below. We've had some discoveries just beside where the open pits are. So yes, once we get through all the 56,000 meters of drill results, we'll have an updated resource estimate out in the first half of next year, and then an updated feasibility study out in the second half of next year. So I agree with you. We'll probably be adjusting some of the pits, extending some to depth, elongating some of them, because we've found a substantial amount of mineralization very close or within the open pits.
I think it's like something like 25 meters below the pit border,
Correct.
50 meters.
Yes.
That is like in an open pit, 25 meters is normally something
not that much.
you really can handle, right?
Yeah, and there was another one where we found mineralization that was only about 150 meters away from the open pit, and there seems to be substantial enough mineralization there that we could extend the pit over. So yeah, we're definitely adding ounces just like we thought we would at Eskay Creek.
Fantastic to hear. So as you said, next year, new resource estimate, updated feasibility. So when will we see the next step then to say, okay, we do a production decision, we do the project finance?
So we find this fascinating, the production decision, because as far as we're all concerned, Eskay Creek is going to go back into production. It's a brownfield site, so I'm pleased to announce that we're starting construction next summer. So to be fair, we've already sort of started construction. We have a construction camp that can house 220 people on site. We fell all the trees over top of the open pit already because that's seasonal. You have to do that in the fall. But the actual construction and moving of earthworks will start next summer. And we can do that with existing permits that we have because it's a brownfield site.
Super, couldn't be better.
Yes.
And how does it work then with financing? I mean, that costs all money.
Yes, it does cost money. So we're in the process right now of starting the due diligence for project financing. We had about 15 different groups up at site this summer. They're all in the data room right now, looking at the feasibility study information, due diligence calls, and that'll lead into project financing calls in the new year, and then we'll announce it in the spring. So we'd like to announce the entire package. 650 million plus Canadian would be the entire package. We have not yet decided on what it'll be. I'm sure it'll be heavily debt weighted because there's only a 1-year payback on capital. But we haven't made a full decision yet. We've got some streaming companies looking at it. We've got alternative lenders. The banks are in there as well. But we'd like to announce the entire package in the spring so that we can start construction next summer.
Super. And what would then be the annual production of the mine?
So right now it's 352,000 gold equivalent ounces per year, but it's very front weighted. So right now for the first few years, we hit more like 400 or 450,000. And we're doing an increase to the mill throughput in year 6. So all the drilling we've just done and the ounces that we'll add in the new year, that'll go towards the back end of the mine life to infill when the grade starts to drop off a little bit. So I suspect with a new feasibility study, we'll hit more like 400,000 ounces gold equivalent production per year.
Super. I mean, you had also AIC in the feasibility. What do you think that might be then? Because still inflation is moving, of course.
Inflation is moving, but we've also... The strip ratio should decrease a little bit because we have turned areas of waste into ore. So I'm hoping the all-in sustaining cost will be very similar to what it is right now. And I believe the number off the top of my head is $652 an ounce.
Which is outstanding. I mean, even
it's
if it
excellent.
would go to 750, it's still
excellent.
I would
Yes.
say, yeah. I mean, even at 750, let's do the math quickly. That's $1,000 margin to today's gold prices times 400,000 ounces. Wow.
Yes.
That's a beautiful amount
There's
of money.
293 million of annual after-tax free cash flow coming out of Eskay Creek.
Super. Yeah. Yeah. Sounds like a perfect game plan, I would say.
Yes.
Please keep us posted, and we look forward then to the developments next year, especially with feasibility updated and the resource update.
Of course. Thanks very much,
Thank you very much. Yeah, ladies and gentlemen, there was Earle from Skeena Resources, and you heard it, a great feasibility, but still they are keeping on to discover more and more gold and silver. And even in the open pit below that, they have found more and more gold. And also, as Kelly said, they turned waste areas into mineralized systems and mineralized areas, which is outstanding because when you can make money out of the waste, this is something what we really like. And the share price is way too low. Really check out Skeena Resources. I really can give you that advice because I think that is a fabulous mine for the next years. And it's exactly a mine what this world needs. And it's a big mine. 350,000 it should be the production per annum, but it will go to 400, maybe 450,000 in the first years. And with production costs well below $800, even given the inflation today, I would say that is a cash cow. Thanks for watching us, and bye-bye from Zurich.